Good afternoon or good evening, guys. This is Heath here. I'm going to actually cover a very quick introduction on wealth management in this video just to showcase you guys what exactly wealth management is and how the financial services industry manages this part of the this part of the sector, and what all are the important things that you need to keep in mind, especially when you are dealing with wealth advisors or financial advisors who are dealing with large sums of money for investment purposes, and what all are the things that you need to keep in mind. So I'm going to walk you through, guys, some of the important topics that you need to know before you start talking to a wealth advisor or your financial advisor. So let's get started. The power of great wealth management. From financial security to lasting legacy, discover why working with a financial advisor changes everything. The three main reason why you would want to work with a wealth advisor or a financial advisor is, first, the financial security, right? That's paramount. The other one is lifestyle enhancement that you are looking for in the future, and then also the legacy building. These are the three most important factors that come into picture when you are dealing with wealth advisor. Okay. Now, um, sorry, why you need a wealth advisor again? The question is that there are a lot of different factors. Okay, these are like the four top most that I can think of, but I will talk about the others as well. But the first and most important thing is that most of the wealth advisor and financial advisors have worked in the financial industry for a long time. They have investment expertise. They know how the market works. They know how investment industry works. They can build you a diversified portfolio that requires research, analysis, and ongoing monitoring. Okay, and there's also a tax optimization that they can carry out based on your portfolio and based on the amount that you're investing. Okay, that basically allows them to look at your portfolio and minimize the taxes that is essential for preserving and maximizing your savings. Okay, they can also give you behavioral coaching. That means at emotional times, especially at major drawdowns in the market, emotions can cloud financial judgment at that time, and advisors can keep you on track. Professional network, they have also professional networks. They can access to attorneys, accountants, and key experts through your advisors network. They also have the expertise in terms of in terms of, again, estate planning assistance as well. If you're planning for the distribution of your assets and protect for your legacy, that requires careful consideration and expertise. They can help you that. Um, the education and empowerment, wealth advice can also provide you some sort of information in terms of how do you empower knowledge and understanding of the overall financial markets and investment business. And they also can give you an understanding in terms of planning for a major life events. Okay, and they can plan out with you in terms of any major life events that might come up that has a major financial implications. Most of the wealth advisors can also provide you retirement planning as well. Planning for retirement involves more than just savings money. It requires careful consideration of numerous factors, and also, again, major factor that involves risk management and asset protection. Right, you have to safeguard your assets against unforeseen events such as major market drawdowns, lawsuits, or health emergencies. That is crucial for long-term financial planning. And they also can build you a very holistic financial planning for your based on your need. The Yeah, as I said, these are like some of the important things that you have to keep in mind. Again, planning for early stages of life, like retirement planning, major life events, state planning, risk management. They can actually give you a very good advice based on all of these events that might occur in life, and you have to be careful in terms of how you're going to manage them, right? The full value of an advisor is that they give you a holistic financial planning. Every aspect of your finances working in harmony, accountability, and support. They can give you have a discipline, consistency in terms of keeping you with your goals that you want to achieve, especially the financial goals that you have in your life. Education and empowerment. Advisors build your knowledge, not just your portfolio, right? Perhaps the most valuable benefit of working with a financial advisor is a peace of mind that you get in knowing your finances are in capable hands. Now, independent wealth managers, the core focus area is definitely, whenever they're managing assets, independent advisors apply a rigorous and multidimensional approach. They basically do portfolio recalibration and risk sensitivity analysis, right? They are continuously rebalancing to match your risk tolerance and market conditions, right? They also are providing you integrated tax strategy in terms of coordinating investments and tax planning for maximum after-tax returns, and they're also doing a multi-generation legacy and governance, that is structuring your wealth to endure and serve the future generation. So wealth advisors give you all of these in one, um, in a one area of expertise. Now, some of the questions that you should be asking whenever you're meeting with a wealth advisor is, who do you typically serve, right? So, for a lot of the people who have not, whose parents or probably grandparents or family members have never actually worked with a wealth advisor, do not know what all are the important questions that you need to ask your wealth advisor. Now, for the first foremost question that comes out is that, who do you typically serve? Understanding their client base reveals if you are the right fit. How do you communicate? Clear and regular communication is a key for a successful advisory relationship. What is your pricing structure overall? You need to avoid any surprises, understand fees upfront, right? What is your investment philosophy? Aligning your philosophy with advisors and ensures that you have a cohesive strategy reflecting your values. All right. So those are important things that you need to keep in mind. So there are other questions as well. It's not just limited to these, but some of the other questions that might come up is in terms of um, will I be working with you or someone else in your team, right? How do you structure your communication? As I already communicated, that it has to be clear, regular, and effective communication. Um, and also making sure that you understand the overall planning process as well. You have to make sure that there's a clear and comprehensive planning process, which is essential for achieving your financial goals. Okay, now we're going to switch over to something very different, because we're not going to talk about just the wealth management side of the business, but also talk about some of the tools that they use for investment purposes. One of the most important and critical part of wealth management is that how is your money or investments being put to use. Now, there is something called the SMA, and this is something a lot of people do not know, especially the retail investors. They manage, they invest in stocks and bonds and ETFs, but we have something called the SMAs. Okay, it's called the separately managed accounts. It's a portfolio of individual securities managed by professional money managers. Okay, unlike mutual funds, SMAs holds directly um, own the underlying assets. Okay, offering transparency, tax efficiency via tax loss harvesting, and full customization. Minimum investment typically ranges from 50,000 to 350 plus thousand. Okay, this is, again, there is a difference between SMA and the mutual fund. So let's talk about that. Now, in terms of, again, ownership, if you're looking at SMA, the clients would have direct ownership of the SMA, whereas a mutual fund, this is basically a pooled share. A lot of investors are involved in investing in the mutual fund, and there is going to be an active manager who's managing that mutual fund, right? The customization in SMA is much higher compared to mutual fund. Okay, it is definitely tailored to each individual based on their risk factor, financial needs in the future, and also what is their risk appetite. The tax implications, especially in the SMA, can be individualized, whereas in mutual fund it's shared and pooled. But the minimum investment in SMA is definitely much higher compared to mutual funds. So mutual fund, there's a lot of folks who can come in and invest in the pooled shares of mutual fund, and the investment shouldn't, it doesn't have to be big enough for them to enter in. But whereas in SMAs, these are very individualized. They have a very direct ownership. So the investment that we look for is at least 50,000 plus. Okay, and then the benefits is that they have a tailored management, institutional expertise, and the fees are as low as 0.21% to 0.46%. The drawbacks are that yes, there is a high minimums and then added complexity and potential diversification limits for smaller accounts. So mostly the SMAs are not built for smaller accounts. Um, Now, there's another part of the business that we have to know that can be used for can be used by wealth advisors, and that's called direct indexing. Indexing investments basically replicates the index. It could be Russell, 5,000, Russell 2000, Dow Jones Industrial, or it could be Nasdaq 100 or S&P 500. Okay, but they basically replicate these overall indexes by purchasing individualized stocks, enabling superior tax loss harvesting and customization that is unavailable in ETFs. So the goal is to basically replicate the index performance while maximizing the tax efficiency. Okay, that's direct indexing. And the customization can be involved based on the ESG filtering, direct ownership, and exclusion of specific securities. And the best part is that it is basically for high net worth investors with significant capital gains or tailored ESG needs. So if you look at it from a direct indexing and active management standpoint, direct indexing, the tax efficiency is much more superior, right? The customization is personalized, the costs are competitive, and the tracking error is much more minimal because it uses the stock level harvesting, which has a higher control. Whereas if you look at active management, the tax efficiencies potentially you can gain them, but again, you have to manage it much better. Customization is kind of limited because you're again indexing. You're basically again looking at you know um, the performance overall. So customization is much more limited. The cost factor is historically higher. The tracking error, which again aims to beat the benchmark. It relies on manager strategy, which is basically again less control to the clients. So direct indexing is definitely superior in terms of tax efficiency and control standpoint, which is ideal for high net worth, tax sensitive investors. Whereas active management, it targets alpha generation, potential for outperform the market through expert selection. Okay, guys. So those are the things that I wanted to cover in terms of wealth management industry and what is involved in wealth management. I'm going to quickly or probably go through more in detail in terms of how some of the other factors that are involved in wealth management and wealth advisory sector, and some of the important factors involved in generating alpha. Because I think the alpha is definitely one of the important factors that we look for, especially dealing with high net worth individuals and who have a very high um, pool sums of money that they are looking for higher alpha generation from their portfolio. So I think those are some of the important factors that are involved in wealth management, and I'm going to talk more about it in the later section of the videos. Okay, so have a good morning, guys.